4,000 points have been down in the stock market. Foreign institutional investors have pulled more than 1 lakh crores from the stock market. Then 1.1 crore traders have lost more than 1.8 lakh crores in the stock market. This is the scenario for the past 3 months. So it is a bloodbath in the stock market. Now, what it all means to a common retailer, what it means to Indian economy, what it means to investments, what does it mean to our thought process? So I'm going to tell you all about that. I'm Sridhar Ganeshan. I'm an insurance advisor, a wealth advisor, and also a portfolio balancer for your investments. Now let us go into the topic right away. For the past 2 to 3 months from January itself, stock market has been on the beat. Now it actually started from October last year, but the main crux of the stock market started falling down like pack of cards from the month of January. And it has been falling so terribly, so consistently that people have lost crores and crores of money. Hard-earned money from the retail investors have lost virtually lakhs of rupees. Your capital has been eroded virtually, leave alone the interest part of it. So all the hard-working money which gone into the stock market with an intention to make more profit has completely got watered. Now, from these things, what do we actually learn? Stock market is a sensitive index. It is sensitive to the world news. It is sensitive to the economy. It is sensitive to all the news across the globe, and to whatever countries it happened. If you remember, Ukraine and Russia war has also resulted in this. Now, what is this for? This is a combination of so many factors. It is US economy not getting stable. They are putting heavy tariffs on the European and other countries. That has badly impacted the relations. Because it has badly impacted the relations, the other countries have also started putting heavy tariff as a reciprocal to US economy. And when this came, the prediction is the US is going into a recession. When the US is going into a recession, meaning all the countries across the world are going to be affected who are directly or indirectly trading with US economy. India in particular have been heavily dependent on US for their trades, for their jobs, for any of the opportunities per se. Now, this being said, when Trump administration has been, virtually non-diplomatic towards this nation on the trade, and they are deporting people because of issues, and they being actually levied huge taxation because they have levied on those countries, the economy looks to be very, very weak. US is almost seeing, recession just across the window. Now, when US is seeing a recession across the window, meaning the other countries will have no opportunities to trade with US, no opportunities as far as job is concerned. The same is reflected for India. From Indian perspective, there have been many reports that there has been a rising unemployment. There has been rising trade deficits. With all this coming, the stock market has plunged in India as well. Now, as a retail investor, what is it you need to remember? Stock market is a risky investment. I would really appreciate, many of the investors across the TV channels and the thing saying that one of the very important advices that you need to invest in stock market as if you are investing in tea, coffee in your breakfast. Very, very important advisor, which means you should not put your hard-earned heavy investments or more investments in your stock market. Your stock market investments should be very, very less or marginal, because that's a risky investment where your capital can completely get washed away. Now, why this is said? Because you cannot predict the stock market, even in the long term for that matter. It can rise continuously for 2 or 3 years, but one massive crash is enough for you to completely take off your capital. And then for that to come up to the level it was actually there will take years and years. So is it worth an investment? The answer is yes and no. The answer is your investment in stock market for a long term should be on a very, very marginal scale. Then what is it I need to do? What is the investments I need to make for my capital to grow? Yes, the answer is here. you need to actually concentrate on guaranteed investment returns. What are the guaranteed investment returns? There are quite a few, but they are conservative. They are less, no doubt, but your capital is secured. Your capital is secured for the simple reason that it's your hard-earned money. Will you lose your capital for all the things you have worked hard and earned and put it somewhere with an intention that it should earn profit? Not at all. So even if it is going to give you 7% or 8% or 9%, it is worth it. Because your capital is secured, you are getting a return on investment, which is a 7, 8 or 9%, depending upon the institution, type of investment. But both your interest as well as your capital is secure. You are happy. You can peacefully sleep in the night saying that, okay, I'm going to get back my money at any cost. I'm going to not only get back my money, but also the interest for that. And also, I know what is the amount of investment I'm going to get back as a return. If you are able to know this, what more do you want? What more do you want? Yes, we all want to make money. We all want to make money very fast. We all want to make money with shortcuts. But the thing is it really worth? Sometimes it clicks. Many times it doesn't. So the proportion and the probability is many times it doesn't, because markets are unpredictable. So coming to the foundation of our thought process, your investments should be in such a way that your capital and the hard-earned money which you have invested should come back to you. First criteria. Second criteria, you should earn an interest on that, because the duration of your investments and savings is going to be quite large. So you should get your interest, you should get your capital, both to you. Third, you should know how much you are getting back. Third thing. Fourth thing, you should likely to withdraw the investments when you want, because it is your money. Can you do that? These four criteria should become the foundation of your investments. Even if it is going to be less, it doesn't matter. It is good to have a regular, consistent returns on your investment, which is guaranteed, and where you can take back your capital and interest, which is far more intelligent rather than investing on some place which is heavily not in your hands. The returns of which is not in your hands. The assurance of capital coming back to you is not in your hands. So you would like to control your investments. When you want to control your investments, you should invest in a place which is guarantee, which is going to give you guarantee for both your capital and returns, and also your right to withdraw all these things whenever you want. This should be your foundation for investment, and your thought process should go in this direction. Okay, I hope I have driven home the point, the very nature how you should try to do this. I don't say that you should be averse to risk. No, not at all. You can be risk taking, but only to the extent that you can afford to make that loss. For example, if I'm earning 100 rupees per month, I should be able to invest in stock market only to the extent of 5 rupees, not more than that. And if I convert that into savings, if I save about 30% of my complete earnings, say for example, if I earn 100 rupees and I save 30 rupees, out of my 30 rupees, only 5 rupees should go towards stock market and investments related to stock market, meaning SIP, mutual funds, venture capitalist, stock market, direct investments, all this stuff. Where is it you need to invest? These are the list of things where your other 25 rupees must actually go. What are those 25 rupees which you need to go? The channels of investments are where there is a guaranteed investment, where there is a guaranteed return. Example, post office. You know what is the interest which is prevailing in post office. The money is guaranteed by the government of India. The interest is guaranteed by the government of India. And you know that you will get back this much particular amount on return at the point of time when they have indicated. You have a right to withdraw whenever you want. Okay. Post office, first investments. Insurance companies, second investment, because the insurance company also guarantees you the rate of return via bonus and guaranteed additions. Now, the insurance companies, in fact, I would say is much superior to all these investments, because it also guarantees life coverages for you. The life coverage is given to you, the returns are also given to you, and there is an extent of giving to you in installments whenever you want. And of course, you have a liberty of always withdrawing the money whenever you want. Then you have government bonds, RBI bonds. These are the investments which you should actually focus on, because they not only give a guarantee for your capital, but also for the interest, also time bound, and all these things are guaranteed by the government of India. What more do you want? Let us try to fine tune our investment, fine tune our thought process of investments by not being too greedy, but at the same time taking limited risk, very very limited risk, to the extent of only what you can afford the loss. And if you are able to do that, you are going to be happy, your people are going to be happy, prosperity is going to come to you without an iota of doubt. If these things are made, that is what your objective in life. You can sleep peacefully. You can say the same education to your next level generation, actually. So, my dear friends, if you want tips on where to invest, how to invest, how much to invest, how long to invest, contact me, and I will give you a very balanced portfolio of investments which can guarantee your principal, which can guarantee your interest, which can guarantee your returns, and which can take you as a powerful man about your investments to withdraw whenever you want. If you like this video, pass it on to your friends and relatives, hit the bell button, subscribe to my channel, and also wait for my next videos. All the best for your investments.